Until last year, Romania was among the fastest growing economies in Central and Eastern Europe.
Romania was growing very fast prior to the last quarter of 2008. It was growing actually at 9% per quarter, and it had been growing since 2003 at more than 6% per year. So it was doing very, very well.
But in 2008, the global crisis hit. Romania's exports dropped sharply, and the large capital inflows that had financed the boom dwindled.
Essentially, the two channels that the crisis arrived to Romania through are world trade, external demand, similar to other countries, and also financial. Romania was growing very fast, but it had a large and growing up to 2007 current account deficit. That was about 14%. It came down to 12% last year, and we expect it to be down to about 7.5% this year. And it had to correct that kind of external disequilibrium because it was not sustainable, as it had to correct its internal imbalances. One was fiscal policy being not tight enough, and the other was a need to slow down private consumption because it was relying on possibly overly optimistic increases in income in the future, and was getting to those increases in income by borrowing in the present.
In March 2009, Romania's government approached the IMF for a loan. Later that month, the IMF announced plans to lend Romania $17.5 billion.
Romania doesn't have a public debt problem. Romania's public debt is one of the lowest, not only within the European Union, but in the emerging market universe. What we do have are fairly sizable amounts of private sector debt, and we need to make sure that when that is being repaid, that's being done again in an orderly fashion without affecting the exchange rate too much. So what we look forward in terms of working with the fund and the European Commission and other donors is to have this kind of preventive multilateral financing package that provides a cushion for reserves. Beyond that, it's, I think, a very appropriate framework to rebalance macroeconomic policy by letting fiscal policy and wage policy play their role, punch according to their weight, and let monetary policy concentrate on price stability and financial stability.
The European Union and the World Bank also pledged funds.
There are several immediate challenges for Romania. First of all is we have to continue the capital spending, the spending in investments. So basically we need to build up the infrastructure, and we need to find up enough money to accommodate that. Then one of the other issues that is of high importance for us in 2009 is the structural funds, the EU funds, the non-reimbursable funds that will come from the European Commission. This money will mainly be used for building up our infrastructure and for social purposes as well.
The money from the IMF will help cushion the effects of the downturn.
The key thing throughout this synchronized downturn that every country in the world is experiencing is to have an orderly unwinding of these imbalances, and to, at the end of it, restart sustainable growth and go back to a convergence process with the more advanced economies in the European Union. In order to do that, for the central bank, it's very important to continue our policy of price stability. Inflation is coming down, and we need, because it's still quite high, we're talking about 6.7% per year at this point in time, we need to continue with tight monetary policy. We also have a need for, obviously, similar to other countries, consolidate financial stability. And this is key when you've had depreciations of domestic currencies that are quite large. Romania was actually on the smaller side compared to other East European countries. We're talking about only about 5.5% vis-a-vis the end of 2008. But compared to the peak of July 2007, the depreciation has been about 30 to 35%. So it's large.
When a crisis hits, vulnerable groups are most at risk. The IMF is trying to ensure that its programs include extra spending on social safety nets.
We will have a minimum income, a minimum guaranteed income that will be done and implemented in the next period. We have already implemented a minimum pension. Therefore, we're trying to help a bit the poor side of the society.
The next 2 years will be difficult for Romania. But with the IMF's help, the government's policies should allow the country to avoid the worst effects of the crisis and recover with a stronger, more vibrant economy.